It's Monday, the 15th of December, 2015. It's a very cold morning here in the UK. There's a bit of a chill outside. Um, all right, so screen share is active, sound is active. Hopefully, everything should be coming through pretty well. Just a quick reminder, it is a live webinar presentation, so it does use a fair amount of your internet bandwidth. If you have any other programs open which might require those resources, like TweetDeck or Skype or something like that, it is sometimes worth closing those down during the presentation, just so that way you receive an uninterrupted broadcast without the picture or sound quality becoming degraded. All right, we're going to start off and just run through the usual format. So a quick glance at the economic calendar this week. Over the weekend, we've had the snap election in Japan, and Prime Minister Abe has kind of scored another victory in those elections. The market doesn't seem to have reacted too greatly to that event, so I guess it was pretty much expected that he would. And in any case, you don't really call a snap election if you're expecting to lose that, right? So on Tuesday, we have the monetary policy meetings from the Reserve Bank of Australia. Tomorrow, we also have the results of the banking stress tests here in the UK, the publication of the Financial Stability Report. And about 9 a.m. UK local time, we have our Governor Carney delivering a press conference. Later on Tuesday, we have French and German flash PMI. So Tuesday, I think, is going to be a day for intraday volatility, considering the nature of some of that data. Watch out for spikes. Wednesday is the big day, though, right? Particularly for the UK and as well stateside. Here in the UK, we have the release of UK claimant count. That is pretty much always a volatile affair here, particularly on the cable crosses. So the UK claimant count, that's equivalent to NFP, right, for the US crosses. So that claimant count data, it does cause a lot of volatility on GBP crosses. As far back as I can remember, you tend to get fairly significant price moves off of the back of that, so watch out for that. Also on Wednesday, the MPC releases their voting pattern from the last from their last meeting. So last time it came out against was it 2 in favor of an interest rate rise and 7 against. Any changes in that, and you're looking at fireworks. So as far as the calendars are concerned, I've been looking at a couple of them, and everyone's kind of, the general expectation is that that voting pattern is going to remain the same, especially considering the recent dovish comments which have been coming out from the Bank of England. And after kind of it is really kind of fool's play, right? But Carney set an expectation that rate rise could happen as early as the end of this year, and here we are at the end of this year and it's not happening. And a few weeks back there was the Bank of England economist who kind of said, well, actually what we're really talking about is the tail end of 2015, right? But the earliest indication you're going to have of that is a change in the voting pattern itself. And so that is what would likely cause sparks in GBP crosses in particular, if that were to happen. So keep an eye on that number. Stateside on Wednesday, we have the release of the federal funds rate after the FOMC meeting. We also have the FOMC statement, and as well we have the press conference, which will be held by Janet Yellen. Again, considering the strength of the US data of late. And that was an awesome NFP number last time around, right? 100K print above the expectation. And as well, considering that we've kind of concluded this tapering program now in the US, the next step is tightening. And although there have been comments out of the Fed saying, well, tightening might not happen as early as you would expect, but when it does happen, it will happen in larger increments, right? So, so what it means is, we might not raise rates right at the beginning of 2015. We might do it at the end, but when we do it, it might not be 0.25 steps, or it might be zero point 0.5 steps. It might be that's the kind of indication that they've given so far. So it's worth having a listen into that, and certainly we've seen a lot of dollar strength recently. If they give any kind of indication that rate rises are going to be later on the cards rather than sooner, you can expect some healthy corrective price action in relation to the most recent trends that we're seeing as far as the dollar and the dollar index is concerned. The week wraps up on Friday with the first Bank of Japan monetary policy statement after the snap election, and as well a press conference following that. If you look at all the interventionist moves which have happened in the yen crosses over the course of the last year, they all pretty much follow a Bank of Japan press conference, right? So again, it's worth keeping an eye on that. That will be Thursday night, early Friday morning, depending on where you are in the world, right? So just keep an eye on that one. That's as far as the calendar is concerned. All right, let's turn our attention towards the charts. There are a handful of pairs that we're looking at this morning from a trade perspective, and everything else from a point of view of general bias. So we'll work through everything pretty much in the order that I've got them on the sheet here on the screen here. Starting off with the GBP USD. This is one which we've been following the fortunes of pretty much since the beginning of November, where we started taking casual bullish positions on the instrument, looking for eventually the resumption of the bull trend on GBP USD. So the viewpoint that I have on GBP USD is a little bit of a long-term viewpoint, which is that I'm looking at the fall from the 72 price handle right down to where we are now as being a corrective move in the bull wave which established from the middle of last year, right? So that bull wave kind of sustained pretty much for almost 12 months, and then about halfway through this year we started seeing this fall in the instrument. And the idea that I have is that if we are going to get a resumption of the bull trend, then this is the place where it happens from. So I didn't become bullish on the instrument until the price reached here, and around about the beginning of November I started issuing long calls on GBP USD, just based purely upon the technical structures that we have available to us. And so if you're looking on the daily chart, we're seeing that the price is between two walls here. And so the idea that we have is that so long as the price remains above the lower wall, so long as she remains above this lower wall, technically we would consider ourselves to be bulls off of that lower wall. And if she can channel here, or if we can get some sideways price movement here, that would be great for us. That would be fantastic. Exactly the kind of price action that we're looking for. And the longer that she's able to make that sideways move, even if she does something like this and you get some kind of rounding price action over the course of several weeks, if that happens and we see a sustained stall here, then the next leg on this is going to be a reversal, and we're going to start finding the bullish momentum developing again on this instrument. So all of that really very much depends upon the price being able to hold above the 56 price handle, being able to hold above our trend wall. In itself, that stall would be the confirmation, right? So if you're looking for a confirmation, the confirmation is going to be that stall. It's going to be that sideways price action, which will kind of confirm that, you know what, she can't fall any further. Based upon the current price structure itself, we have resistance now. That resistance is coming in at the 58 price handle. And so from a pure technical perspective, let's just kind of clean the board here. From a pure technical perspective, from a structural perspective, you'd say, well, so long as the price is remaining below the 58 price handle, technically the bears actually remain in charge, right? So we haven't seen a structural reversal yet. What we have here is just a notion that, you know what, we can be casual bulls above this 56 price handle, above the trend wall. So long as the price is able to stall here, so long as we get some sideways price action here, our confidence in that analysis and that outcome can grow. But from a structural point of view, as far as it stands right now, you have the resistance at the 58 price handle. From a technical perspective, the bears remain in control below that. So it becomes a question of how aggressive or how conservative you want to play this. The aggressive play is to start launching bullish positions as the price dips towards the wall. If you want to be a little bit more conservative, you wait for that sideways price action. And if you need a structural confirmation, you wait for the price to break up above the 58 price handle, then a pullback towards the 58 price handle, and you're going to look for that area to become support, and then you get your continuation to the upside. So this would be the ultimate conservative position. This is the one where the northerly breakout will act as confirmation of a resumption of bull momentum, or the resumption of the bull trend in GBP USD. So a little bit of a play here. There's plenty of time for this to work out as well. Bear that in mind, considering that, if we're talking about a wave reversal and we're talking about the price reaching the 70s again, then there's a lot of time to do this, and there's a lot of pips to the upside. You don't have to kind of jump on the back of it with a very aggressive exposure or very aggressive position size straight away. There's pretty much all the time in the world to wait and let that happen, if indeed it is going to happen from here, right? So this is the kind of counter trend thinking. This is the reversal thinking which is going on here. If you want to think in terms of the current trend and the current wave, then like I said, it's about 58 handle, and so long as 58 handle holds, particularly if we get a breach of our trend wall here, then there is no reason actually not to be imagining that the price could break down much further, and we might even see by April and May of 2015 a retest of the 148 price handle, right? So even that is something which is worth considering. It is all about bias here, and it's all about the technicals. So long as that wall is giving support, I don't have any reason to actually look to be selling. But once the price is broken down below that wall, then it becomes reasonable to look for a more significant follow through to the downside. And toward that end, we could be talking as deep as 148 to the downside on GBP USD. Bear in mind, we do have a election coming next year here in the UK, and in fact, this would take, if she does reach 48, it would take prices back all the way to where the prices were during the last general election in the UK. All right, so 48 price handle to the downside, considering political event risks, but the technical remains the wall, and above it we're bulls, below it then we can become casual bears looking for a sustained breakdown in this instrument. And you know what, there are enough events this week, there are enough events on the calendar this week, or events of significance which could allow either of these scenarios to play out, right? So like I said, it's worth following, I think in particular what happens on Wednesday, right? And Wednesday is going to be D-Day for this. from a structural point of view right now, you'd favor the breakdown above or ahead of the reversal in any case. All right, let's move on. What else we want to take a look at? USD JPY. This is an interesting one. USD JPY is an interesting one from a structural point of view, and we actually made a call short on this last week, just around about there, right? And she's fallen down from that quite a lot. You have structural support coming in there, right? So that's visible just above the 117 price handle. I like the wall, right? So we've got this wall kind of marked here. I do very much suspect that if we do get another bullish rally on this, and if she goes and hits the underside of that wall, this wall matters, right? I have absolutely no doubt about that, considering that we've had very clean strikes on the underside of that, right? So, originally it was connected from these points here, but we had very solid resistance there. We have a very solid resistance there. There's no reason not to believe the next time she goes and hits the underside of that wall, that it would not act as a resistance. All right. So even on a longer term horizon, it's kind of worth keeping that marked. Right now, in the near term, we've seen the price falling, and last week we were selling the instrument. As far as that fall is concerned, the block that I would be looking at is here. Right. So I would say that so long as the price is able to remain below 2040, right? So long as it remains below 2040, then there is no reason not to believe that we could have continuation to the downside, and a breach of that support there at the 17 handle, that would be a significant event, and that could become trigger to look for a much more sustained follow through to the downside, and we would have reason for imagining the price to head back towards the 110 price handle, even considering that she is overdue. I think she's overdue a significant corrective move right now. We saw this rally in the kind of beginning, midway through the year, and in fact this last one we're going back to October, right? So at the beginning of the quarter we've had quite a solid push from 105 up to the 122 price handle. She's overdue a significant correction, and so as long as she remains below that 120.40 block, I think it's going to be worth looking for further move to the downside on this particular instrument. Very, very clean technical structures here on USD JPY, making interpretation quite straightforward and relatively simple. USD CHF. Right. It's been a lot easier to measure the fortunes of the US dollar on USD CHF than it has been to try and measure that on the Euro USD. I'm finding the structure a lot cleaner. It's a lot easier. It's a lot easier to read. I have a wall which is marked here. A little bit of an awkwardly marked wall, considering that the price taps her way through it quite often. All right, but one of these times what we're going to find is that the price comes and taps her way through and doesn't reverse, and in fact follows through. All right, one of these times we're going to find that, and you know what? It might even be this time, and it's one of those where if you've got 20 pips to spare, if you've got 20 pips to spare, just wait for a bearish hourly candle here. And if you want to go at market, you can even go at market if you want to be as crazy as that, right? But just wait for a bearish hourly candle here. She's at 96.70. And if you get a bearish hourly candle off of this level, just short it and look for follow through to the downside on this particular instrument, risking about 20 to 25 odd pips, or risking the length of the body of that particular candle. And it's one of those which is, I mean, ordinarily, what we're looking at here is a channel, right? There's potential here that there's some kind of a channel in play, right? And if this channel is going to break down, then it would not be unreasonable to expect price to make a move to the base of that channel, right? So that's the kind of move we'd be looking for, down towards the 93 price handle. That's what we'd be looking for, right? And so, like I said, if you get a bearish hourly candle, I think that would be enough of a confirmation off of 96.70, and just look for follow through to the downside. The idea being here that you're going to be risking, maybe 20, 25 odd pips, but to the downside, you have, 300 to 400 pips to play for. And just the R and R on that alone kind of makes it worthwhile to be making one or two attempts in order to get this channel breaking down. That's the thinking. That's the idea behind this. So again, it is counter trend thinking. It's a counter trend trade. You have to mind your exposure just a little bit, all right? But if she's going to make her move down, this is where she'd do it from. And we kind of have a key level here. We have a key level here, which is the monthly open price. So that's coming in where? 96.76 exactly, right? That's the monthly open price for December. And so long as the price is remaining below that, December is a bear month. If the price is breaking above that, then December becomes a bull month. And that is the ultimate way in which you're going to determine bias, even at this stage in the month. That is the direction of the flow. So above 96.76, you can be a bull. Below that, you can be a bear. And so long as you're buying above that level and selling below that level, the wind will always be in your sails, so to speak. So I like the idea that there's a channel here and that the channel is going to break down. This week, I'm looking for a short entry on the dollar Swiss. Again, looking for a significant corrective move down towards the 93 price handle eventually. And I think if it's going to happen, this is the kind of trigger area that I would expect it to happen from. Okay. What else are we going to take a look at? Let's look at some of the Aussie crosses. All right, so GBP AUD is a short play. We have a support resistance wall as such, and it might look a little bit scary now, considering that she's moved almost 160 odd pips from that wall. But I think if you're happy to go with chasing an hourly candle, a stop above 90.80 would be enough. And in fact, she's moved quite a lot in the last couple of hours, right? But from a structural point of view, what you're looking at now is this block here. That's the block there, right? And what I'm saying is that so long as the price remains below that block, then you can expect further downside on this instrument, which means that stops have to be positioned above that. It may help right now to look for a secondary trigger, right? So maybe something like this. We have a broken trend wall, a pullback to that trend wall. I think that could act as a trigger on GBP AUD, but it's a short play, right? She's hitting a wall, right? Is a little bit visible, a little bit better on my H4 because that's the time frame that I connected the points on, right? But she's gone and hit that, clearly rejected from it. Any pullbacks to the underside of that wall, even if she corrects as deep as the underside of that wall, all of that would be a short play on GBP AUD. Euro AUD, we have a similar trigger, and we called a short this morning in trade notes, and again, she seems to have corrected quite significantly since this morning, but hitting a resistance wall, and since this morning she looks like she's down what? Yeah, down like almost 60, 70 odd pips in the just in the space of just one the last hour, really, isn't it? Right. So yeah, she's down 60 odd pips in the space of in the space of the last hour, and we do think that there's a swing reversal which is coming here. All right. So what that means is this is just the beginning, and any kind of pullbacks here again to the underside of that wall, I think that they can be sold quite comfortably. And in the near term, so long as the price remains below that block there, right? So we see that resistance cluster. So long as the price is remaining below that resistance cluster, then we would consider the bears to be in control on this instrument, and very much suspect a much more significant correction to the downside. And if she really goes for it, what are we talking? We could be talking. Certainly, we're talking about the 49 handle in the first instance. After that, you're talking 47, and then you can keep breaking it down in 200 pip blocks until you reach probably 44, right? So we might even be talking 600 pips to the downside on this particular instrument if we are indeed getting a swing reversal from here. And what it means is, if you want to know what that means in kind of real terms, you're talking about that being the December high, I guess. All right, that's potentially where we're at with this, right? So there's significant potential to the downside. We've already triggered shorts this morning in trade notes, which I publish on my website, but it's all about that block now. So that block is between 50.80 and 51.20. So long as the price remains below that block, then the bears remain in charge, right? That's where we stand currently structurally on the Euro AUD. What else are we looking at? GBP NZD. All right, let's look at some of the GBP JPY and pound Swissy. GBP JPY, the analysis isn't that far different to the analysis that we've delivered on USD JPY. We believe that there is room now for a much more significant correction. This is the last support area for GBP JPY. Hence, we consider that block to be resistance. And so long as the price then remains below that block, we very much suspect that we are going to get deeper correction on this instrument. Support actually on this instrument is all the way down at the 181 price handle, right? So at least 400 pips to the downside on the GBP JPY. That would be invalidated on hourly, 4-hourly closes above the 188 price handle, right? So, how you affect entry on this, I think that's a different issue right now. But as far as the bias is concerned, the bias is squarely south, so long as she remains below that block. All right, you could kind of go at market, or you could choose to fade that block. Fading it might be a better option, or you can just mind your exposure, right, and reduce the amount of exposure that you have, and start building or adding once the position is significantly in your favor. But so long as she remains below that block, we favor further corrective action on GBP JPY, heading towards the 181 price handle. That's your support cluster that has become resistance, and so long as the price remains below that, we're quite happy to maintain a bearish outlook on the GBP JPY. Pound Swissy. the wall which you ought to have marked on the pound Swiss, and I might have mentioned this a couple of weeks ago, the last time when I was here, but this is the support wall on the pound Swissy, and what we'd say is that so long as the price remains above that, technically the bulls remain in charge, even if she collapses towards that a couple of hundred pips. But once it happens that she's broken through that wall, that brings the bulls, that knocks out the bulls, and the bears become in control at that time. Right, so it's a bias issue, right? But it looks like it's not the cleanest support wall we've ever seen, but nevertheless, a support wall. The next breach of that, a pullback, you'd be looking for that wall to turn resistance, and you'd be looking for some follow through to the downside. Euro JPY. Euro JPY, bit of a trickier read, right? A little bit of a trickier read than GBP JPY and USD JPY. But what we're looking at here is resistance at the 148 price handle. And what we've done is we've marked a wall like this. This wall makes a secondary trigger. All right, so the price breaking down below that, that becomes a trigger to be looking for short on the euro JPY. Euro AUD we've already covered. All right, so what remains? NZD USD and NZD JPY. Okay, last couple up this morning, right? NZD USD, and we'll take a look at NZD JPY also. First off, NZD USD, you know, I've been quite a consistent bear on this instrument. I've been a bear on this instrument even when she was in a strong bull trend. So it kind of shows you how stubborn I can be sometimes. But the idea that we have here with this instrument, I mean, there's a couple of things which are going on here, right? And even some conflicting or even some conflicting fundamentals, right? So, all right, she's fallen from the 88 price handle and she's down at 77 price handle, right? So that's a fall of 1,000 odd pips in this instrument, and a lot of that fall happened by the Reserve Bank actually talking the instrument down, right? So they started talking it down, going back quite a while, but they were talking it down there. There is talk that they were intervening in the market here back in September of this year, right? They're actually intervening in the market to cause a collapse in the value of this instrument. And so the issue or the kind of question that arises is that are they done with that? And is a fall from 88 down to 78 significant enough devaluation in the Kiwi itself? And, you know, I don't think so. I think that she can devalue further. And actually, you know, we're going to be coming back to this instrument next year at some point, and she will be in the 60s. So the issue kind of becomes, all right, you know, if she's going to devalue, you might get some corrective action before that. You might get some spikes and some surges before that. And if that happens, how far could that go, right? That's the kind of question that I have. And so from a non-trading perspective, from a non-trigger perspective, I'd be looking to kind of short the instrument on any rally, right? And the first place that I'd be looking to do it at is this wall here, right? So I think we've got quite a clean proven technical trigger. So if she does rally and she goes up even through that 80 price handle, but she's hitting the underside of the wall, that is the first place where I would start looking if I had to fight the flow, because I have a number of different techniques which I'd use as triggers, right? But if I had to fight the flow, so you know, we have our monthly open here, pretty much where the price is now. That's where our monthly open is. She hasn't strayed very far this month. In fact, she hasn't strayed very far this whole quarter, right? So if we're going back to the 1st of October, the prices were somewhere around here. And right now we're looking at a doji candle on the quarterly, on a quarterly time frame. So if she broke north and she went and hit the underside of that, I'm fighting the flow. I'm fighting the direction of the month. I'm fighting the direction of the quarter. But I would be prepared to do it on the underside of that wall. And that price kind of matches up with where the Reserve Bank was intervening in order to devalue the Kiwi dollar. And so I very much suspect that they would do it again. And they would intervene at that price level in order to defend and devalue the Kiwi dollar itself. So if you do get that rally, I'd be quite happy to be fighting flow at that level. On a casual basis, a break above the 78 price handle, I'm not selling. But if she remains below the 78 handle, then I'm quite happy to be selling. So, right now, considering where she is and the price level that she's at, the Kiwi dollar is a short. She remains a short even if she rallies all the way up to the 81 price handle. But if you're fighting the flow, 81 would probably be the best area to be doing it from. And just note these clusters here on the left-hand side. All right, just note the clusters here on the left-hand side. That is where you've got to be looking. Certainly, these are the clusters which have been holding the price action, right? Okay, so you can kind of see it. You can kind of see it there on the left-hand side. So that's the Kiwi dollar. It's a long-term play. It's a short. You would expect the 81 to hold it. If the price is breaking above the 81, you can kind of quite happily sit aside and just wait, and see what's going to happen next. But certainly we know that the Reserve Bank was not happy up at the 88 price handle. So another push towards those highs at 88 after that, that is definitely going to get sold into. All right. But in the near term, we're going to look for the 81 to hold. So long as the price is below the 81 price handle, we're quite happy to be triggering short plays on the Kiwi dollar. Now, what with the Kiwi dollar being in that kind of sideways move and the structure becoming harder and harder to read inside of a sideways move, it may be worth looking at something like NZDJPY, right? And saying, okay, if we're looking for weakness in the Kiwi, right, it's not, that weakness in NZD-USD isn't necessarily going to be a reflection of dollar strength, but it could become a reflection of Kiwi weakness. And that being the case, if you've got a clean read on another Kiwi cross, something like the NZD-JPY, then it's worth looking for the shorting opportunities there. And so toward that end, what I'm looking at is just this wall here, right? And you might have to mark it a couple of times, right? So something like that. Any push to the underside of that wall, I would look for a confirmation. And a confirmation to me would just be a 5 or a 15-minute bearish bar off of it. I think that would be enough. And I'll be looking for a short play off of that, looking for this instrument to break down. And again, I think there's significant room to the downside on this, just as is the case with pretty much all of the yen crosses. We could be coming back to this in a few weeks' time and maybe finding her as deep as 87 again. All right, so I like the idea of shorting NZD-JPY. She seems to be going flat here. It might even be an ugly double top, right? So worth keeping an eye on this one. And structurally, it's a lot cleaner than having to look at GBP or wrong one, right? Structure is a lot cleaner than having to look at the NZD USD. All right, it's just a lot cleaner than having to do that. Okay, folks, that's your lot this morning. I won't be back here until January. Let's just take a look when. So until then, season's greetings to the lot of you. 5th of January, I'll be back here. Uh, if you want to catch me before then, the best place to do it is on my website, which is wmdforex.com. Hang on, there's some questions here. Where did they come from? Okay, Mr. Ray Huss. Are you based in central London? I've been following your webinars. I've tried several times to telephone, but no answer. Okay, you can contact me on Skype. My Skype ID is WMD4XX. All right, that doesn't seem to be going through. Let's just try it there. Skype WMD4XX. Right, so that one's going to Russ and anyone else who's been looking for my contact details. Contact me on Skype in the first instance. It's WMD4XX. That's my ID. I'm not in central London. I'm actually based out of Birmingham, right, which is just a little trek up north from London, right? Mr. Michael John, AED USD. Sure. Okay, so that's the Aussie dollar right now. Okay, and the wall that you ought to have marked on your Aussie dollar is this one. That's your support resistance wall. Any pullback toward that wall and the instrument is going to get sold. You're looking for a move down through the 80 handle into the 70s down to the 77 price handle. But the bias is going to be determined by this here support wall. If it happens that you get a Marabuzo up through that, right? So a strong bull bar up through that, then on a pullback, you can look to start buying the Aussie dollar. All right, that's the play there on Aussie dollar. So below that wall, we remain short on the Aussie dollar, but any break up above that wall, then at that point you can start becoming bullish. Until then, hold off. Right? Don't become bullish. Don't become bullish on the Aussie dollar until you've had the break through that. And it's one of those. I would rather be a bear and wrong than to be bullish right now and find that I'm right. Okay, we don't have a technical reason for being a bull right now. As far as the structure is concerned, you have a resistance at around about the 83.50 price area. Let's just check that. A little bit higher than that. You've got resistance at 83.70, and so long as the price is remaining below that block, then technically you do well to consider the bears in charge. But once the price is broken up through that, at that point you can start buying pullbacks, and the bias would flip to the upside. It's just a case of taking a cautionary approach. You do not really want to find yourself on the wrong side of the flow here. So the common sense approach would be to say I'll remain bearish until I have a reason to do otherwise. Okay, one more. There is one more to cover this morning, so which is not available on Oanda, so we're just going to look at a silver. Anyone looking at silver? Any metal traders here? Yes, no, maybe so. Okay, so this is silver, and what we're talking about on silver is something a little bit crazy, right? So At the beginning of every year and at the end of every year, I like to produce one analysis, which is which a lot of people hear and they say, okay, call the guys wearing the white coats and have them taken away. This might be one of those, all right. But what I'm saying about silver is that is support, right? That's the support here on the left-hand side. That is a support that was established throughout pretty much the entire month of October, right? So support, 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 support. And now we're coming and hitting the underside of that. You'd very much suspect that it would be resistance, 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 right? What is the significance of that? The significance of that is that if the price now remains below 1750, if 1750 can hold, and it's still an if question, right? So, and if it happens that the price goes and breaks up through that, H1, H4 closes above that, that invalidates the bear bias, right? But if it holds, what you're looking at here potentially is a very significant swing to the downside, right? And we're talking about price breaking down below 16, and we're talking about price breaking down below 1540 and below 15, and to the downside. Maybe we could come back here in a couple of months' time, and we're talking $12 an ounce, right? All right, it's a very, very significant forecast to the downside on silver. And all of that depends just on this one block, right? Just depends on this one block here, right? So support becomes resistance, swing reversal from here, making that the December high for silver, and to the downside 12. It's worth thinking about just because of the R and R alone, right? So, if you've been following for any length of time, you'll be more than aware that it's very rare that I look at metals. I only ever come too many scars, like everyone else, I guess, right? But every now and then you get some price structure which is readable, and this is a readable price structure, right? So I'm looking for a swing here, a very, very significant swing, and you don't have to be crazy aggressive with this again, right? But anytime the price is falling, it just acts as a confirmation that we're right. Okay, that's all it is. So she's at 1680. She falls to 1660. It's a confirmation that we're right. She's going to 12. She goes to 1620. That's a confirmation that she's going to 12. Right? She goes to 1590. That's a confirmation. And every time you get a confirmation, you can take a little bit of exposure because the price is telling you you are right. Okay? And you know what? If she breaks up above that 1750, the first loss is the best loss, right? It will not have cost you very much because when you get started, you only need a little bit of exposure to do that. Then after that, you just need the price to tell you that you're right, and you can start building your exposure that way. But silver, I would be very, very interested in right now. Again, I've published this for subscribers this morning, this particular chart. It is worth having a very serious look at and giving it some consideration. Okay, folks, that would be your lot this morning. Thank you very much for attending. I will be back here on the 15th of January. If you happen to be in southern Spain over the Christmas, that's where I'll be. So you're more than welcome to look me up on Skype if you want to meet up and if you're in that part of the world. Otherwise, until the new year, season's greetings to the lot of you, and we'll meet again. Thanks very much for attending. Bye. That's the 5th, Mr. Erhan.